Hi everyone, Gianni DePocia here with you for Theo Trade, and today is Tuesday, September 2nd, 2025. We're starting off this month with a bit of selling in stocks, and so I'm considering calling this a slippery month of September. September is historically a bit more of a choppy period from a seasonal standpoint. It doesn't automatically mean that we're going to see markets drop for the entire month, but definitely starting off on a selling foot here today with technology and the Nasdaq leading the selling lower. I pointed out some of the risks that were rising, the cracks emerging in the foundation of this rally over the last couple of weeks. We did see energy as the best performing sector on the week. But I have the chart of semiconductors up right now. You are trading on technical support. You can see here that you broke above that resistance zone that was in effect back in June, and you're basically just retesting that now. This is very healthy and normal price action. And even though that we have seen energy emerge as the best performing sector over the last week, we still are seeing communications as the best performing sector over the last month, year to date, and over the last year. This in of itself is pretty bullish. So this allows us to draw a conclusion that any dips that come through in this market right now are a gift. I repeat, any dips that come through in this market right now are a gift. You want to buy the dip. Nothing has changed in our bullish thesis. If we somehow make it to new highs by the 7th of September, then this rally turns 5 months old. That's very long from a historical standpoint. So this is a very normal, healthy, cyclical pullback in stocks, and one that should be embraced with open arms. Volatility is the price that we pay to invest. And speaking of volatility, my good friend here, Don, is the master at trading volatility. You definitely want to check out what he's got brewing right now here at Theo Trade when it comes to volatility. So VIX seeing a little bit of a spike here today. VIX futures, VIX cash up a little bit more. Still haven't even taken out the high of August 1st. So I would be looking for that to happen. But other big movers in this market today, obviously gold capturing a lot of the headlines, breaking out to new all-time highs. Do have a near-term target in the $3,800 area modestly. We could easily go up above there, but there are some signs mounting that this rally is kind of running on its last legs. Now, when I say that, that doesn't mean that you can't see it go parabolic. It just could happen in a very short window of time. And when it happens in those short window of time like that, it really evokes those animal spirits that are notorious for coinciding with important market tops. So everyone's talking about gold and silver now. In fact, I've been trading it with some pretty good success over in the Trinity trade. Barrick Gold, we've been long that name, getting close to our upside target in the $28 area. So gold is looking pretty strong in this environment, but I do think we're getting closer to the end of this rally compared to the beginning. So, you take a look at also what's happening in Bitcoin and Ethereum. We are coming up off the lows in these markets here. And I'm not ruling out a low being complete. I do like the setup that we have now, similar to what we were looking at in semiconductors. Bitcoin basically retesting former resistance turn support here. And I do think that a low of significance could be complete, if not imminent. And I just, again, have a tough time believing that we could be in a market environment where crypto holds up nicely and stocks sell off sharply. I just don't think that crypto is that important just yet. It's not a safe haven asset. It's basically the NASDAQ and high beta on steroids. So Ethereum's actually down today as Bitcoin is up, but some of the names that we've been trading with some good success in the crypto space include HUT. I am watching MicroStrategy here. It's trying to catch a bid. A lot of people have been questioning whether Saylor still got it, myself included. Ethereum treasury stocks have been all the rage. Names like BMNR from Tom Lee. This one's actually holding up a little bit better. It's been trending lower for the last couple of weeks, but if we're in the process of forming a higher low, I think some good things could be coming, especially once the price of Ethereum bottoms. I'm still a pretty big China bull. The only thing I'm working through right now is the dollar's making a bit of a comeback in this flight to safety trade that we're seeing, this environment where money is going back into dollars. You're seeing treasury sell off. Not exactly the ideal environment for international names, but China continues to be the name or the country with, I think, the best momentum opportunities. We've been looking at names like Baba. Baba had a big day, another Trinity trade name. And in fact, a couple weeks ago, when I did a presentation on freeze points, I used Trip.com as an example of a stock that was breaking above its freeze point and had a big up day last week. So you're seeing these big moves play out in a handful of Chinese names. And I think when you compare how Chinese stocks reacted last year to when we had those first rate cuts in September, I think that we're setting up for another similar scenario where they could really start to accelerate quickly and strongly to the upside. And the thing about these Chinese names is that, once the country starts to run, I mean, you've seen at the ETF or index level this country double in the past, but you even have names like Alibaba. Could this be another double or triple candidate in a 12-month period of time? You also have those other terrific 10 names that I think are strong candidates for doing so. So don't sleep on China. There was some talk over the weekend, oh, China and India getting together. That's fine. That's fine. I think that at the end of the day, markets are going to sort it out however they want. But just to, show the charts that I was referencing a moment ago when it comes to the dollar, nice bid here in the dollar against the yen. Could the carry trade be coming back into play? Remember, the carry trade is when you sell the lower yielding currency to buy the higher yielding currency. The Bank of Japan still has a much lower interest rate compared to the Federal Reserve. And historically, when the dollar yen has risen, it's been pretty good for US stocks and pretty good for US tech stocks, especially. So don't sleep on that. The euro is starting to reverse here. We do have a significant lower high as it seems. It is the first day of the trading week. I try not to give too much weight to that. Normally, I'm coming to you on the second day of the week, but since we had Labor Day yesterday, it is the first day of the week. So have to reevaluate that a little bit. But as you can see here, dollar is benefiting from the sell-off in bonds. Higher rates are coming into play here, and I would look for this to actually bottom out soon. I think we have the rate cuts coming in a couple of weeks from the Fed, and especially when it comes to ZT, the 2-year Treasury note, I'd be looking for this to break out. I've been telling Theo Trade members, if this was a stock chart, I'd be giving you the instructions to trade this because it looks that strong. Just not quite ready yet, but we should have our answer here in a couple of weeks. But all in all, on the inflation front, we look at crude oil. Decent rally today, but still not that convinced that it's a major issue at the moment. But like I said, at the index level, guys, get ready to buy the dip. In terms of support, I'm looking at the S&P maybe falling to 6,000, 6,100 worst case scenario. We might not even get that low. Remember, everyone last week was saying the AI bubble has burst. The NASDAQ was only 2% in 2 weeks off of the all-time high. It's been a rather quiet market since then. We actually had a pretty strong Thursday, sold off on Friday. But here we are now on the third week of the pullback already. So are we going to see something similar to what we saw in Bitcoin, to what we saw in semiconductors, where the NASDAQ simply comes back down to retest former resistance turn support? That would be around the $22,000 area, only about 1,000 points lower. I think at that point, it's a pretty good idea to start dipping your toes back into the tape, especially if you've been underexposed or not participating as much as you would have liked in the rally since April. So that's what I have for today. Check out our very special volatility specials in this environment because I think that's going to give you a lot of actionable opportunities in this tape over the next week or two. So let us know if you're interested. Hope to see you in the Theo Trade chat room otherwise. Take care, guys. Thank you.